name is Alyssa DeMarco, Investment Director at Magellan. Today I'm joined by Arvid Streimann, our Head of Global Equities, Portfolio Manager, and Head of Macro. Arvid, the US election. Donald Trump has been elected for his second term and the only second president to serve two non-concurrent terms. So, Arvid, it was our base case that Trump would win, but we didn't expect it to be so convincing. Why did America vote Trump, and why was polling so inaccurate?
Yeah, thanks, Alyssa. It was a very strong result for Donald Trump. And I think that one of the main reasons was because people's standards of living had actually deteriorated under the Biden administration. And when we think about standards of living, we can measure that through something like consumer sentiment. We know that consumer sentiment's been on the lower side. And when I think about consumer sentiment, people who consume in America, they're typically voters as well. So you can think of that as voter sentiment. And the reason why they were unhappy with the existing administration, of course, which Kamala Harris is the vice president, is because inflation was very strong under the Biden administration. So the cost of living had gone up a lot. Okay. And so when we're thinking about how much people could purchase in real terms, in volumes, that had really reduced, and that really made people unhappy. And even though the inflation rate had come down, those price levels were still high. So these people were still unhappy. And I think that this means that incumbents throughout the world were on the wrong side of this phenomenon. And that really made it difficult for Kamala Harris. Even though she's the vice president, not the president, she couldn't distance herself from Joe Biden. And so on that score, I think that it was very difficult for her to get elected. The second thing here is that when we're thinking about Kamala Harris, I'm not that sure that she was as strong a candidate in terms of giving people a very strong outlook of what to expect under her presidency. She was playing a very small target strategy, and we all know that Donald Trump plays a big target strategy. And I think the voters were looking at, well, who's the best leader? Well, with Donald Trump, I know what I'm getting. With Kamala Harris, I'm not sure what I'm getting. I think this is really, when we're thinking about those two things, what has caused the election result.
Thanks, Arvid. So really two key points there. It was the leader, but also the economy and how people were feeling. So given that point on the economy, what should we be expecting under a Trump presidency?
Oh, look, we know that Donald Trump is a pro-growth president, and when he does that, he stimulates the economy, likely through fiscal policy. I think what you're going to see here is higher growth, which equals higher inflation and higher interest rates. Some of the moves that you saw overnight, I think, were reflective of this. I think this is one of the first things he's going to do. He's going to stimulate growth, and it's going to flow through in the manner which I just described. The second is I think he's going to cut red tape. He's always been pro-growth and anti-regulation, and so I think that the more highly regulated industries are going to benefit here. They're going to have less oversight from the people in Washington, essentially. Okay, and then the third thing that I would say is going to happen to the US economy, Donald Trump's going to have some pretty strong conversations with friends and allies. The most important trading relationship in the global economy is between the US and China. And if you remember back to the first Trump administration where he signed a big trade deal with China, I think that he's going to try and deliver something similar. But remember, that first trade deal, we got into COVID. China didn't keep up its end of the bargain in terms of how much it was going to purchase. So I think that that's going to be a very interesting conversation.
All right, Arvid, you did mention markets and that it's been positive for markets. And as global investors, let's talk about what's going to happen in the future. So a little bit of a lightning round here, and interested in what are your expectations over the next 12 months. Let's kick off with the tech sector.
For the tech sector, I think this is generally very positive for a couple of reasons. Firstly, it's a highly regulated sector, or at least subject to regulation. And to the extent that he's going to dial back the regulation and the enforcement of that regulation, particularly on antitrust matters or competitive matters, then I think that's very positive. But there's another side to the coin here. He might go after companies where he doesn't really like the CEO or doesn't really like the company. One company that fits squarely into that bucket is Meta Platforms. And so when we're thinking about how we might go after Meta Platforms, I think he would like to do something. The trick is, what can he do which doesn't hurt his pal Elon Musk's X, or the X Twitter business? So I think that there might be something there, and we'll watch and see what he does there.
Thanks, Arvid. And the healthcare sector.
Yeah, so when it comes to the healthcare sector, I think it's going to be a little bit mixed here when it comes to company impacts, because I think there's two broad things which Donald Trump's going to do. The first is that he's going to shift the burden of paying for healthcare away from the government onto people's employers and also to people themselves. And so you have to figure out how your company is impacted by that. The second is what I mentioned before with about regulation. There's a lot of companies which benefit from M&A and have a M&A-driven growth strategy. To the extent that that's become easier, then their profit outlook has just become a little bit rosier. So it's those two things which I think you need to look at in the healthcare sector.
Super interesting. And how should we be thinking about the consumer sector here?
So when it comes to the consumer sector, I think this is going to be mixed. So we know that Donald Trump is pro-growth, and so that's good for employment growth and that's good for spending. One thing that he did in his first administration was the Tax Cut and Jobs Act, and some of those provisions in there were going to expire in 2025, in particular some of the household or individual income tax cuts. So he's going to make sure that those are extended, which is good for consumption. The other thing which we know he's going to do, he's going to slap tariffs on stuff from overseas, in particular from China. So again, when you're looking across companies, you've got to figure out which ones are most impacted by that, particularly the companies which have most of their imports from China. But when we're thinking about this, I'd say that most companies are going to try to push on that tariff cost onto the end consumer. And so we'll really see what happens onto margins there. And I think this goes to pricing power.
And to round it out, how do you think about the banking sector?
Okay, so for the banking sector, I think this is going to be quite positive. Let me talk about some of the big issues here. Regulation in the banking sector. We know it's a highly regulated industry, in particular when it comes to the capital requirements of the banks. I think there's going to be less focus on that going forward under Donald Trump, and that's a positive for the banks. Secondly, when it comes to growth, we know that he's pro-growth, and banks essentially are a toll on growth. Okay, they benefit from high growth, so that's going to be good for them. And then when we think about some of the more traditional commercial banks, where they earn a net interest margin, they borrow from depositors and they lend it out, to the extent that that is going to move out further because interest rates go up. I think that that's highly positive.
Thanks for joining us today. Please tune in later this month for our Magellan in the Know podcast, where we will dive deeper into the US election, touching on geopolitics, macro, and importantly, the investment implications.